Mortgage Today. I'm Faith Howard Mooney, the SVP of Member Engagement here at the Mortgage Collaborative. Many of you probably already know who's with me today, Heidi Patalano, who is the Editor-in-Chief of National Mortgage News. Heidi, thanks for doing this with me again today.
Always such a pleasure to chat with you, Faith. Thanks for having me.
Yes, of course, of course. Like we've been talking about many things, including fraud, which is a horrible thing to start the conversation with. But everybody just beware for yourselves personally. There's fraud out there with people that are trying to do some things. We've had a couple of challenging situations in our lives here. Keep your mailbox safe. It seems to be a little bit more of a problem these days than at other times. So we will start with that, but move on very quickly because that isn't a very one of the things that so housing inventory, I was kind of looking at some things this week because I've actually seen like for sale signs in front of houses. And signs being there for longer than a day with no sold sign on them here in the Twin Cities. So it started me doing some digging into things. So I was kind of looking at housing markets. And one of the things that I found was a Newsweek article that talked about housing specifically in Texas. So for those Texas people that we have on here today, tell me whether you're experiencing any of this at all or not. So inventory at a high, 113,000 listings out in the market, active listings in Texas, triple the level 3 years ago. Is that surprising to you? It was to me.
It is to me too. I mean, definitely.
No one in the chat. No, we have no Texas peeps on with us today. Yeah. North Texas is exploding. Yeah. Well, and that's yeah. So 2017 there were 103,726 active listings in Texas. It dropped below that a year later. And then a year later plummeted, but now it's going the other way. So yeah, and it looks like Austin, Dallas, which is where part of the area where I know Tony is in that she's a little bit north of Dallas, and San Antonio. Inventory is now well above long-term norms. So in your world, you write about this kind of stuff like quite frequently. Have you seen anything showing that kind of a trend anywhere else?
Well, I think it's pretty fascinating because that coincided with a report from Zillow this week that talked about more incentives for renters being showing up on their listings, which, you know, like the buying market and the renting market, there's a relationship between them, you know, and the reason why there were so many more concessions for the renters was because so much inventory was coming onto market. Like there was a building boom in multifamily properties, and so there's now, you know, they're really trying to have to sweeten the deal here. I wonder in some of these areas, like particularly in Austin, where, you know, prices went up so high, you know, maybe these things are sitting on the market longer because they're just reaching a ceiling in terms of interest, in terms of what people will bite on, you know. We saw, let's see, there was a study from NAR just today that said in San Diego, pardon, just checking my notes, making sure I have the right town. San Diego, the median price is now $2 million. And it's the first time that wait, let me just check that out. Hold on. San Jose. I'm so sorry. so sorry, pardon me. Median single family existing home price for San Jose, California metro area. So the metro area, $2 million. It's the first time since NAR began tracking the metro area single family home prices in 1979 that a metro area's median price exceeded 2 million. So
Yeah, so up there, Michael, thanks for the note in the chat. No issues selling a home in Houston in 9 days, including hurricane days. We should have those. Those should count a different way, I think, hurricane days. That does seem quick, because what this article had said is Austin 51% surplus, Dallas 38%, Houston 14%. So maybe they just have a really ideal property in a great neighborhood, no doubt. And so sold for a little bit longer. It also has shown, which is interesting. So San Jose up, going up. I mean, 2 million, that's kind of outrageous, really, no matter where you live, right?
yeah.
Especially for a median.
Mm-hmm.
That's median price. That's not, upper end pricing. A median, I mean, not upper end pricing averages, median pricing in there. That's amazing. But list prices, it says in Texas, are also dropping. So Austin down 6% year over year. Dallas and San Antonio. I got San Diego on my brain now.
Sorry.
San Antonio, other state faith, down 4%. But still values are high. Of course, it's just like softening a little bit because they had shot so high. So yeah, I thought it's the first of that I've really seen like documented anywhere that way. So I was kind of surprised by that. But if North Texas is exploding and some of these places are still doing a lot of building, maybe you're right. Maybe it's just, what's out there in the rental space versus what's out there in the housing space. So Mark Renaud, thanks always for being on here, number one, and for sharing some information. So location and price point in Southeast Michigan. If you have a home for sale under 400,000, it's typically gone in less than a week. Those seeing inventory creeping up a little bit. Okay. All right. So maybe it's right now, it's a very market by market type of thing, where we're going to see, many different things, many different places.
Right. And I think his point is a good one in terms of the price point, right? Anything that's somewhat affordable there's still way more demand for those than there are homes available, right? But then when you get into like the luxury properties and all of that, maybe it's a little longer that those will sit on the market.
Yeah. So. Yeah, I think that's funny. We've all come up with varying terms on affordability now. There's like kind of affordable, there's affordable and maybe affordable and borderline affordable. I'm seeing it in all the news articles I'm reading. It seems like everybody's coming up with these different terms on trying to describe really what's happening to people. There's not just an affordable and not affordable out there anymore. There's all these variations of what it is. Meanwhile, in Florida, there was a study done that homes listed for sale in Tampa in June, asking prices being slashed. And so in Florida, starting to see same sort of thing happen with some of their housing market, at least. It did state in this article that Austin, Texas was the worst housing market for growth in the nation, which is so funny to me because Austin was always, but Texas, right? But was a boom town for such a long period of time. Mm-hmm. But yeah, listing price cuts 29.544% in Florida, in Tampa, had a cut in their original listing price. And then 5 of the top 10 worst markets were also in the state of Florida. So it says
Right. I
warm weather
think
places where I want to be.
right. And I think it goes on to talk about some interesting factors as to why that might be, right? I mean, there's a lot of things going on in Florida, whether it's the fact that there's more of this scrutiny on like the condo buildings, right?
Yeah.
And like having those two, they're having to be reassessed. And that comes at a great cost to the people that own in those buildings, right? And
Yeah, that was a huge eye opener for me. I mean, I've never really lived in like a condo rich market
mm,
like that one
mhm.
is. They really have just cropped up in the market that I live in, like within the last 10 years, and not to that. We don't have the same views they have there to make some of those like super appealing. They definitely have a much better view for some of those buildings in what happens. But 30 buildings, 30 years and older. Of course, the new ruling is they must have inspections done prior to the end of the year.
Mm,
So what's happening apparently with many of those condo owners, and for Florida people or people where condos are really prevalent, hop in here if you've ever like owned one and you could see this situation happening. What's happening is after the tower in Surfside had collapsed, they're now requiring new inspections. Well, the folks that live in some of these buildings, many of which it's a fabulous place to retire, right? So
right.
many of these people are retired, they're on a fixed income. And now that they're having these building inspections done, of course, what happens? They find things that need to be fixed.
Right.
And so in the process of fixing them, we all know what happens with that. Everything's expensive right now. Everything is expensive to fix right now. So some of these, you know, communities are being hit with special assessments.
Right.
And of course, those special assessments probably hit home a little bit more for people that are on a fixed income. And maybe have also seen insurance costs rise in some of those markets. I mean, it's kind of like a compounding factor, right?
Right.
Not just
Yeah.
one thing is going up.
Oh, absolutely. Right. I mean, and I really would love to hear from anyone in Florida about what they're seeing, especially in regards to homeowners insurance too. But as you mentioned, like we just did a series of stories about homeowners insurance going up, and a lot of times, well, I mean, it's been said that people will list if their homeowners insurance goes up to such a degree that they can no longer afford it anymore. And we have
Right.
heard of it going up to a large degree, like very extremely, in a short period of time. Let me see if CoreLogic had a report saying the average premium increased 33% between 2020 and 2023, which is much higher than the rate of inflation. So
For everybody.
yeah, like that was just
Insurance
like an
in general.
average, yeah,
Okay.
for homeowners insurance in general. And so I think when people are faced with that kind of increase, they're like, I'm gonna list, I'm gonna get out, I can't do this, maybe, so I'd love to hear what people are seeing in their own markets about it, because it's a really tough time out there, and there's not really a solution yet for how to handle the prices going up to such an extreme degree,
Yeah. As far as in the condo situation, not only that is the other thing that the condo associations have to do is they also have to approve, not the homeowners, but the condo association has to show that they have the funds available to do the maintenance
Mm,
and potential repairs. So it makes you wonder for some of these other buildings, then is that going to come into play somewhere as a factor too, that the actual association has not necessarily not only kept up with the maintenance piece of it, but do they have the funds available if they have to complete the maintenance, which it looks like now's the time where some of those things are maybe going to be scrutinized a little bit more than
Mm,
maybe they have been in the past. Here's the quote that I saw, which I thought was um, it was a comment to Newsweek. Um, the surge in condo listings in Florida, they were called a mass exodus driven by fear, with retirees in the crossfire.
mm,
That's kind of scary. As an older person, I'm sure, nobody wants to move either.
right.
Um, yeah, so people unable to or have the money to fund their required reserves by state law, which is one of those. And then apparently some individuals are being forced to try to sell their condo or have a lien placed on their condo, which I'm sure happens from time to time. But I think it's a different situation if something like this causes it to happen en masse, right?
Right.
Where it impacts a whole bunch of people. I'm sure that happens from time to time in any community that you reside in. But it could be kind of, I think, a cascading effect. I mean, it grows if it impacts more people, that's for sure. Um, you also you did a series of articles. You talked about one of them related to homeowners insurance, but you also did a couple of other articles related to servicing values and also the impact on secondary. Do you want to talk about those a little bit?
Yes. So I'm also going to drop these in the chat. So in case anyone's interested in checking these out. Yeah, basically we took a deep dive into what the impacts are to these things, because on the one hand, they're, with servicing, the float goes up, but also, this makes it harder for the person to repay. And kind of like I alluded to, this means many do they pay off sooner. So these these issues are very kind of unwieldy in some ways for servicers, and because also there are different rules across states about the preemption. I think I might have, let's see, I think there's a link in here to do with it. But also, yes, right. Some of the rise in insurance premiums can be a driver to relocation. That was something Selma Hepp told us at CoreLogic. So anyway, yeah, there's just a few a few random details I have there, but it's a very interesting situation because it has an impact on these on broader market the broader ecosystem in the mortgage market.
Yeah.
So definitely
And
take a look at this.
I was going to say we don't necessarily, dive into all of those things, but it's just like anything else. If you impact one thing, it impacts the whole ecosystem
Yeah.
of things. Kind of it moves along the way. It typically doesn't just impact one segment of an industry. One of the things that I ran across when I was looking at stuff this week is obviously we've talked about many terms. I mean, we've talked about one of them was, locked in, people feeling locked in.
Mm,
Um, so you're going to come back to that one a little bit today. So homeowners that have felt that um, and are staying put in place because if they move, number one, they have a higher interest rate. They may have a higher housing cost to the actual house. And they're oftentimes, if you're people like me looking to move downward in size, you're going to be paying more for a much smaller property than what you were a much larger property. So that being part of the reason. But one of the things that I saw this week is the impact of people who are feeling locked in what it's costing the US economy. So
Hmm.
when people don't move, then all of these other things start to happen as well. So you don't think about all the things that you have to move when you have to, that stimulate the economy a little bit when you move, right?
Right.
Um, Whether it's buying furniture, moving companies working, um, you know, people at your municipality, they're already busy enough. They're trying to build things, but people in those places, processing all of those change requests. I mean, it kind of like goes down that, if you go down that rabbit hole, it literally impacts like a bunch of other things. The estimate from the National Bureau of Economic Research said the impact of that between 2022 and 2023 was $20 billion
Wow.
in the US
Wow.
economy. Yeah. I mean, that's a significant amount of change in the market. But the paper went into studying the phenomenon of mortgage rate locks, or being locked in. Um, of course, people were staying to maintain their fixed rate, which we talked about, rather than moving to take on a higher mortgage interest rate. Um, so yeah, and with that said, then of course, uh, now 4.96 trillion was the total value of US homes, hitting a record high at 49.6 trillion. So home ownership is hard to come by, and so that's why some of this is happening.
Hmm.
Uh, Now mortgage rates went down.
Right. I was just gonna say, well, we can, there's a sunny side here. There's definitely a sunny side. I keep hearing George Costanza in my head going like, refis are back, baby. You know what I mean? I don't know why. You know how he would say that? I'm back, baby. Um, so so that's exciting, right? Refinance volume made up 17% of rate locks in July, we just heard this week. And that's really good. People who bought most recently are like, okay, now I'm going to get in there and get this lower rate. So that's good. And then also there was this other report. Bank of America had revised its prediction of when the Federal Open Market Committee would cut rates. And they said the first, let's see, lost my place, but more are predicting at least 2 cuts, more are predicting September. So there are reasons to be cheerful here. And so, we're going to pump up that optimism that we're all going to like see a bit of a reprieve in the market. There's more listings, the rates are coming down. Let's hope
Yeah.
that this creates some momentum, you know?
Yeah, especially here. I think we could use a decent dose of that here as we go into the end of, the summer season in some of our markets. I think that would really help kind of boost people, and how they're feeling about things today. I've got to give a shout out to a couple of lender members that I heard talking today. We had a group that met today, and one of the things that they were talking about amongst their group, which got to give them kudos, a bunch of guys in mortgage, they were talking about how to love on their team a little bit
Oh,
more.
yeah.
And I thought that that was such a pleasant thing. I mean, we have great lender members within the TMC family, so I guess I'm kind of not surprised by that. But to sit back and be listening and hear them talking about the things that they were trying to do, to help their team kind of make it through the end of this, and being positive about maybe seeing a glimmer of hope kind of going on, as things picked up. I thought that really was very touching, to be able to hear them say that, yeah, we've learned that we need to love on our people a little bit more
Yeah.
than what we've had to do in the past. And just the fact that they recognize that, kudos out to them. I thought that was pretty inspiring, in and of itself, that their culture is to care about their
Yeah.
team, and to do that. One of the things that I wanted to talk about, we just have like 3 or 4 minutes left, but one of the things that I wanted to talk about, and shout out to Kirk Willison. He's someone that I read his commentary whenever it comes out, because I think it always has these little nuggets of information in there. And in a market where we're trying to find baby steps of improvement, there's
Yeah.
not any one solution out there that is going to solve for what we have going on.
Mm,
Um, but his capital commentary at the end of July was all about um, manufactured housing.
mm, mm-hmm.
And the interesting part wasn't necessarily what the US has done within the manufactured housing space, although it is considered the largest form of unsubsidized affordable housing in this country. But it was more about, he brought up how Germany, yes, Germany, I want to make sure I've got it right, how Germany has dealt with it, and they have gotten to the point. So we think of manufactured housing as like houses that are very cookie cutter,
Mm-hmm.
very, every house down the street, that vanilla neighborhood, that they all kind of look the same, and maybe the exteriors look a little bit different, but room shape and configuration and everything on the inside looks the same.
Mm-hmm.
Well, so in Germany, they have started to do something a little bit different. So
Hmm.
they're still considered manufactured housing, but instead of like the typical structure that we would see, it's almost like, I don't know, I looked at it as kind of like ordering your house. Um, so not, knowing that this is what you're going to get and just pick out the insides of the house, but like
Mm-hmm.
ordering your house, that like instead of a wall here, I don't want a wall there. And
Mm,
so then manufacturing your house to fit how you want it to be, of course, within a certain, realm of changes or modifications that they would be able to do based on code,
right.
um, and all of those types of things here. But I thought it was interesting to see that, instead of just, because I think sometimes people think of manufactured housing, they don't want to have a house just exactly like their neighbors.
Mm,
Everybody
mm-hmm.
wants to be unique. Everybody wants to have something different, right?
Yeah.
But they've gotten it down to the point where they can, with some modifications in a home, they can make homes that are more accustomed to people than just like the standard roll it into the neighborhood, like pop it together type of construction. Have you seen that or heard of that anywhere else in, where your business has taken you?
I think I've heard of a company or two that do that in the US, but I do think it's similar to things like the down payment assistance programs. It's like consumers just don't know. They just may not be aware of these things. And once there is more knowledge of what's available and what's possible, then more people, there'll be more uptake. But I mean, there's all sorts of issues to do with that, right? But I think it's exciting.
Yeah.
I do, and yeah, I think I don't know.
Yeah.
I see a comment here about it. I mean, I'm very interested in that too, if the customizations increase cost.
Yeah, Bernard, it did not say in this article at all. I'm sure if you were doing any big or major thing, yeah, it might increase the cost, but it really kind of didn't sound like it. It's more like their process was set up, um, in a way that you would know, like going into it. I suppose it's just calculated in just like any other change that you would make.
Mm,
Um, in a normal home, but it did not make it sound like that. As a matter of fact, it sounded like they've kind of gotten over that hump where in the United States, I think a lot of times manufactured housing is kind of seen almost as a lesser.
yeah.
And it sounds like they've kind of been doing this for a while, and it's not just it's a standard part of their build process now versus, something that people are maybe doing just for the affordability piece of things.
Right.
So
Right.
So I look forward to seeing more on kind of that different types of housing and things like that. It's always slow to move. It's always teeny tiny baby steps. Yeah, and some people are 3D printing homes as well. There is some of that going on. I know I think Lennar is one that has some developments that they're doing some of those things that I believe in Florida, but I could be wrong. Yeah, so it's always interesting to see, how things are changing and being modified out there to try to come up with a new and different solution that moves us just even a little bit forward. So
Oh
appreciate
yeah,
y'all for being
what's
on with
that?
us today. I said I
Oh,
appreciate
thank
y'all
you.
being on with us today. Yeah. Always great to see the comments in the feed. Heidi's with me once a month. I always look forward to those days. So thank you, Heidi, for joining today. And thank everyone else for joining. We'll be back here next Tuesday at the same time. Appreciate you all. Keep loving on those employees, everybody. I know you do.
Good advice. Yeah.
Thank you,
Thank you,
Heidi.
Faith. All right.
Yep.
Have a good
See you
one.
soon.
Bye-bye.